If you've taken the plunge and signed on the dotted line for your first or next UK buy-to-let property, your gaze will now be shifting to the next stages of your investment preparation. We'll be discussing property funding, lettings and portfolio optimization in the coming weeks, but there's a very important, more immediate consideration that's often overlooked: special purpose vehicles, or SPVs if you're really street. Welcome to our latest episode of the Harbour Property Group podcast. I'm Chris Thompson, and today we'll be taking a closer look at special purpose vehicles and understanding a little more about who should use them, when and why. I'm joined today by Bianca Berg, who will be representing GetGround, an international company formation specialist. Bianca will help provide us with greater insights to all things SPV. Hi Bianca, many thanks for joining me today. Maybe you'd like to start by just telling us a little about yourself.
Yes, of course. Well, it's really good to join you guys and talk all things SPV. So my name is Bianca. I work for a company called GetGround, and we specialize in the setting up and the managing of UK property holding companies. And these are companies specifically designed to hold investment residential property. So my background, I'm originally from Holland. I moved over to London after studying real estate and worked in real estate for one of the larger companies in central London. And about 10 years ago, they decided that it was a good idea for me to move to Hong Kong and look after all of their property investors in Southeast Asia. And then from there, about 3.5 years, almost 4 years ago, I moved over to Singapore to help GetGround with getting the word out on how amazing property holding companies are for investment reasons. That's it. So I'm in Singapore right now.
Thank you very much, Bianca, and welcome. So great. I should at this stage air a slight disclaimer that company formation and tax advice dovetail into each other quite nicely. However, GetGround are not specialist tax advisors, but rather company formation specialists. And the two things are very separate. If our viewers or listeners are in need of tax advice beyond company formation, they'll need to seek it independently. Okay, with that out of the way, on to the topic at hand. Scenario. You've completed the exciting part of the process, chosen your investment property, you've an idea of your costs and also your likely income, and therefore your projected profit. The last thing that you want now is to pay any unnecessary charges or taxes that can only serve to erode your gains. This is where an SPV really comes into its own. So Bianca, what exactly is an SPV? Just some general positioning.
Yeah, so an SPV stands for a special purpose vehicle. And what it essentially is just a wrapper around the asset. It's just an entity holding your investment property. The company cannot trade. It cannot. Well, we don't allow it to employ anyone. So it's just a wrapper around the asset.
Right, gotcha. Thank you very much. And I understand that more than half of investment properties are now purchased via an SPV. I was really surprised when I read that. So what would you say are the headline benefits of purchasing an investment property through an SPV as opposed to, let's say, personal ownership?
There's quite a few actually, and investors structuring their property investment through SPVs is something that's not new. Tax efficiencies have always existed for companies. However, since 2017, we've seen quite an aggressive change in how investors are now dealing with this, and that's mainly due to a tax change that came into place in 2017. It was announced in 2015, came into place in 2017, and that was linked to the mortgage relief. It's called Section 24. So in the past, everyone could always offset all of their mortgage interest from their tax bill, which means that if your rental income is £20,000 for the year, then your mortgage interest is probably going to be in the region of about £15,000 per year. Now, if that £15,000 is a tax deductible expense, it means that you're reducing your taxable income from 20k to 5k. Now, that changed. As of 2017, only companies can still treat their mortgage interest as a fully tax deductible expense. Now, what happens? I think everyone who's been looking at investment properties over the last few years, there was a lot of media attention about landlords are exiting the market. Does it make sense to hold properties anymore? And yes, everyone who held those properties in their own personal name that are often higher rate taxpayers, if you pay 45% income tax on all of your rental income instead of the net profit, it doesn't make sense to hold that anymore. So what we saw was a lot of investors were selling their existing stock and reinvesting through a company. It's actually more than half. So last year in 2023, 74% of all of the investment properties sold in the UK were sold to a UK limited company. So that's almost 3 out of 4 investment properties. And that number will continue to rise this year, I'm sure.
Sure.
Now, some of the other key benefits are not just that the mortgage interest is fully tax deductible. Corporation tax in general is lower compared to income tax. Companies don't pay capital gains tax. Corporation tax is lower compared to personal capital gains tax. They also offer limited personal liability. So, for example, the mortgage sits in the company name and not in your own personal name. And then, in addition to that, it's a lot easier to gift company shares compared to gifting property. So there are some benefits on the inheritance tax and estate planning as well.
Right, excellent. Thank you very much. So tax and tax structuring, especially when it comes to saving and investing money, can be a bit of a taboo topic. But it would seem not with SPVs, you don't hear any noise. Even the UK tax authorities, HMRC, quite like working with these instruments. Why is that?
Yeah, the UK government, they've really been clamping down on tax avoidance and money laundering as well. And this Section 24, this mortgage interest relief for companies, was specifically brought in to get more visibility and transparency in the markets. The UK government really wants to professionalize the rental market. It's such a fast growing industry as well. And it has been for many, many years. And they started with, in 2008, where tenants' deposits were no longer payable to landlords. They had to be held in a governmental body in the tenancy deposit scheme. And ever since, there's more and more rules and regulations that came into place to protect tenants, to protect landlords, to offer that visibility and transparency. And this is where it kind of stems from.
Right, gotcha. Okay, so our mantra at Harbour Property Group is to try and take as much complexity as possible out of investing in UK property. We want clients to find property investing in a straightforward and, dare I say, even enjoyable experience. With that in mind, what advice can you give to our subscribers about how difficult, or more to the point, just how straightforward SPVs are to both set up and maintain?
Well, companies can be difficult to set up if you want to do it right. Anyone can register a business on Companies House. I think it will cost you £12, but that is not the most important bit. You have to structure your company the right way, especially if you want to access financing. You need to make sure that you structure it in the most efficient, tax efficient way. It's important that you comply with rules and regulations. So if you would go to your standard high street accountant, yeah, it can be really costly. On average, I think they charge about £2,000 per year. And as a business at GetGround, we've removed all of that complexity. We do everything online. So ultimately, we are a technology company and we do everything through technology. So we set up these businesses within 48 hours. We structure them specifically around the buy-to-let industry and the tax system that comes with it. We open the UK business account as well for your rental income and your expenditure, which is very important for your international investors. But we ensure that all of the companies that we manage comply with rules and regulations. And because we only set up one type of company, we can do everything in build, we can do everything through tech, and that is how we can keep our costs low for the investor. So it's a very hands-off approach, really. It takes you 20 minutes to design a company through our platform, and then we do everything else.
Right. Okay, thank you very much. As I mentioned earlier, we're obviously keen to provide clients with the best possible returns on their investment. So with this in mind, what are the costs involved in setting up an SPV and managing it on an ongoing basis? You mentioned there it can be, sort of £2,000, I guess, if you're to use an accountant to do it for you. But what do you guys charge?
There's two components to our fees. For the companies that we set up for your clients or for investors, we have a one-time setup fee of £249 plus VAT for UK residents. For non-UK residents, it's a little bit more costly, £579 plus VAT, because we need to do our compliance checks internationally. And then we have an ongoing running cost of £21.98 plus VAT per month, which comes in just under £265 per year. But anyone who already has an existing property and they want to move that company, they hold it in a company and they want to move that company to get ground for the secretarial services, we would just charge the running cost of £21.98 plus VAT per month if the company has one property. It's a little bit more costly if there's multiple properties within that company.
Yeah, and I suppose when you compare that against, you mentioned earlier, the tax benefits and so on, when you compare that against the savings in terms of tax, if your planning is correct, then it's a very small amount of money, isn't it?
Oh, for sure. What you also shouldn't forget is that if you need to do your personal tax filing, you need to employ an accountant anyway to do that for you. Unless you've got time and knowledge to do it yourself. But your personal tax filing isn't cheap. And in fact, they're moving all of that online as well, which is even harder for non-UK investors. And I think that's coming into place in 2026.
Yeah. Excellent. Okay. So what do you get? So you pay your fees that you've just mentioned, and you pay an ongoing subscription, a small amount each month. What does that cover altogether? What do you get for your money?
Yeah, for setting up the company, the setup fee, we give you your fully operational business. So it includes the company incorporation, the web filing with Companies House, the legal structure of the company, so your board resolution, shareholders agreement, share certificates, etc., and your business account for your income and your expenditure. The monthly fee, the running cost, would include your accounting, your company auditing, your tax filing, post management. If you want to take out a dividend and we need to issue dividend vouchers, that's included, and ensuring that your company complies with rules and regulations. So everything is included in its setup fee. We've opted for a very transparent fee structure, mainly because most investors, they don't know what to ask for when they're asking for a quote with an accountant. No one's set up a company before. You don't know what is required to run that company. So just keeping it simple and transparent was very important to us.
Good. You have a system of one property, one SPV. Why is that?
There's a few reasons for that. No one's really done that in the past, mainly because of the cost involved to setting up the business and running the business. If you have a small rental property somewhere in the north of England and it generates £7,000 in rental income, you don't want to pay an accountant £2,000 per year just on running cost. But our fees are so low that it allows you to really separate all of your assets. And this is something that's quite standard in commercial real estate. The residential market has just not really picked up on it yet. But what you're essentially doing is building a firewall in between each asset. So if anything were to go wrong, for whatever reason, with one property and one tenant, the bank can only repossess that one property held by that one company. All of your other assets are completely ring-fenced by its own legal entity. So that's a very safe way of investing. But it also gives you a bit more portfolio flexibility and ease of shared ownership. So, for example, you can have one property between you and your spouse, one with a sibling, one with a business partner. Maybe one of them you want to pass on to your children, but not your whole portfolio. So that is another reason. But it also allows you to not only sell the property, you can sell the company itself. And you would only really do that if your buyer is also an investor. But if they were to buy your company, it means that, first of all, there's no land transaction taking place. So your buyer does not pay stamp duty land tax. They'll just pay 0.5% taxes, stamp duty on the share transfer. So that makes your property a lot more interesting to purchase. So that could be an exit strategy for you. What we've seen so far, where the company was sold, was that the saving on stamp duty land tax was equally split between both parties. So it allows you to potentially sell at a slightly higher price. Meanwhile, your buyer is still saving thousands of pounds, so everyone's happy. But for the seller, for the original investor, you're selling a different asset class. So instead of selling property, you are selling shares, and capital gains tax on shares is a maximum of 20%. So the ultimate dream would be to sell the company, but you should never limit yourself only wanting to sell the company, because the market may not be there. And realistically, the majority of secondhand properties are sold to owner occupants, people who want to move in. But it's important that you have that flexibility.
Sure. So yeah, clearly SPVs play quite nicely with your exit strategy as well. As well as maximising the benefit during the course of the investment. So, okay, you have to get your timing right, though, don't you? So this is one that is very important. You must get your timing right in order to make sure that you can maximise these benefits and avoid things like stamp duty, levy tax, and so on. Talk us through that, the timings, and when these things should be put in place.
Yeah, ideally, well, the cleanest way is to exchange contracts in the company name, and then complete through the company as well. You can exchange in personal name, and then if there is an option to reassign your contracts after exchange, you could use that to then complete in the company name. The downside of that is that sometimes you do need to pay your solicitor their fee again. Often with off-plan developments, you're liable for paying the developer's solicitor's fees as well. So that could be quite costly. But then also you can do it after you've already owned the property. But it comes with a price tag. So if you were to sell the property from personal name to your company, that is a land transaction, that is treated as a sale. So you, the individual, as a seller, could be liable for capital gains tax. If that property increased in value, then your company, the buyer, will have to pay stamp duty, land tax again. So it's not ideal to change existing property to a company now. However, for anyone based in the UK that is a higher rate taxpayer, it might make sense in the grand theme of things if you were to pay that upfront cost now for your savings over the next 10 or 20 years. So then you really need to crack down the numbers. But you can absolutely change to a company if you already own it, if you've bought off plan, you've already exchanged, but not yet completed. But the cleanest way is to do it from the very, very start, as soon as you reserve the property.
Yeah, sure. It can sort of go against the grain a little when you put if let's say you've got a 24-month off-plan property and the client wants to purchase the property through an SPV. The exchange on the property might be right at the start of that process, and to put the company together and then maintain it on an ongoing basis, then there can be a bit of expense involved. But quite rightly, as you say, when you stack that up against the long-term gains, but also if you don't exchange in the company name and you have to change things later on before completion, that can be quite expensive as well, can't it, in terms of charges with solicitors and developers?
Totally. You have 2 times the solicitor's fees to pay again. They have to do the work again. And solicitors don't come cheap. So make your reservation, pay your reservation fee, set up your company. Within 2 days, the company's listed on Companies House. Your lawyer has everything that they need, and then exchange in the company. That is the absolute cleanest way. But this is why it's so important to do these talks, right? It's about educating individuals before they even narrow down an investment property. Do your research first, speak to the right people, have a really good understanding of the tax implications wherever you may be, and wherever you might move to in future. It's really important to get that structure right from the very beginning. If you don't, then it could cost you a lot of money later on if you have to change it.
Absolutely. Okay, so final question for you, unless there's anything that you want to add, of course. You're primarily a tech company at GetGround. You mentioned it earlier on. What are the key benefits for the client with that sort of tech base?
Everything is done so quick. everything is done through technology. This is the only reason that we can have your company incorporated within, incorporated and legally structured within 24 to 48 hours. This is the only reason we can have your business account up and running within 24 hours. And it's the only reason that we can keep our costs so low, because we can do everything in bulk. The tech is there. And everything is done online. There's no need to print and scan and courier. Everything is done online. And we've got an excellent support team. Our target is to respond to clients within 4 hours. So far, we are on target, which is good. We've got, although we're everything is done online and we are a technology company, there's about 100 people working in the background making sure that the products is very sort of self-serving and intuitive for customers to use.
Excellent. Okay, is there anything else before we start to wrap up, Bianca? Is there anything else that you wanted to cover off, or are we there?
I think we've covered most things.
Excellent. So we now know what a special purpose vehicle is. We know when to use it and how. When you sit with our advisors and we explore your property goals, we'll be able to tell you pretty much straight away if an SPV is going to be right for you and if it'll add value. There aren't many scenarios where that won't be the case. We'll then introduce you to Bianca and the team, so I guess we'll be seeing more of you, Bianca. Remember, the decision ultimately depends on your individual circumstances and goals, but with the insights we've shared today, hopefully you'll be better equipped to make an informed choice. For more information, please visit our website at harbourproperty.group, www.harbourproperty.group, for more resources and to book a free consultation with our investment team. Please don't forget to subscribe and share this episode with anyone interested in the UK property market. But for now, a big thank you to you, Bianca, for taking the time to share your insights with us. And from me, thanks for listening and bye for now.